Hi everyone, welcome back to Corporate Decoder. We are going to sift through a 10K report. And let me tell you, it's less about killer bees and more about killer spreadsheets. But trust me, there are some stings in here you won't see coming. The company we're diving into today is Apimeds Pharmaceuticals US, a company focused on developing a bee venom-based treatment called Apitox. They are trying to make it in America for issues like knee osteoarthritis and eventually multiple sclerosis. Let's see how their financial health is shaping up. First off, a little red flag. The report indicates there is substantial doubt about the company's ability to continue as a going concern. In plain English, this means there's a big question mark over whether they can stay in business for the next year without a major cash infusion. That's not exactly what you want to hear about a company trying to make it big. Alright, let's peek at some numbers. For the year, general and administrative expenses, which are the costs of running the company day to day, went up from about $648,000 to roughly $1.27 million. That's almost double. What caused this jump? It looks like the two biggest factors were an increase in professional expenses and payroll expenses. For the company's offices, think lawyers, accountants, and executive pay. Let's talk about other expenses. Interest income, which is what they made from cash they had lying around, went down a bit. What they had to pay for borrowing money, their interest expense shot up, leading to a net other expense of around $114,000 compared to just $30,000 the prior year. So they are making less and paying more. So with all of that, we get to what everyone looks at, the net loss. The company lost almost $1.4 million compared to around $777,000 the year before. That's almost double again. So yeah, money is going out faster. That loss is primarily due to those increasing administrative and professional costs. All right, let's move on to cash flow. Their net cash used in operating activities is about $734,000 compared to $624,000 compared to $637,000 last year. Operating activities is everything you do as your normal course of business, and they use more cash this year than they used in the last year. This is just further showing that they are going through money faster. To compensate, they have tried to bring in money with financing, selling new stock. This year it was around $326,000. Last year was $1.3 million. Let's take a quick detour. Apimeds talks about cybersecurity and what they are doing to protect their data. They say that they have safeguards and security in place. However, they also note they don't bring in outside experts to check these systems. They do review third parties for security though. Here's something interesting. They have an exclusive agreement with Apico Inc. for their bee venom. However, it has an expiration date of 21 and further allows Apico to sell to a Korean company. That doesn't seem very exclusive. Good news, the company is not currently involved in any legal proceedings. Always a good thing to see. There's no real public market for their stock right now. That also means it is hard to assess real price since it's not really trading. What about the executives? The only named executive officer in the report for both years is Eric Emerson, the CEO, who made $300,000 for the last year. Diving a bit more into this, Mr. Emerson's employment agreement does note that he gets stock options equal to 3% of the post-IPO capitalization, of which 40% vests upon grant and the rest vests over 3 years. They did get a consultant in October for a fee. The company also has a code of business conduct and ethics. There is also an insider trading policy to make sure that everyone is trading the stock fairly. Looking at who owns the company, Inscoby Inc., a South Korean company, owns about 70% of the company. Lastly, let's check out debt. The company is carrying a fair amount of it, which should be concerning. Most of their debt is held with Inscoby Inc., which may be concerning for the debt to be repaid. Finally, the board has determined that some of its directors are independent. This is important for corporate governance, ensuring the board isn't just a rubber stamp. Now, stepping back and putting it all together, Apimeds Pharmaceuticals US Inc. is a company in a tough spot, in my opinion. Their losses are up and their operating cash flow is down. They depend on a key ingredient, bee venom, from pretty much a single place. A lot of the cash they are getting is just from shareholders, and they are piling on convertible debt. The company may have some potential for their bee venom treatment, but as it stands now, there is a lot of risk involved and the ship is not sailing smoothly. That wraps up this deep dive into Apimeds Pharmaceuticals US Inc.'s financials. What do you think? Is Apitox a future blockbuster, or is this company facing an uphill battle? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button, subscribe for more corporate decoder content, and I'll see you in the next video.